Welcome back. It's been a minute since I've filmed, but I'm back. Today I'm going to try and finish up talking about the tax reform changes to individual tax filers. My goal is to finish up the tax reform series altogether by the time the holidays start, just in case our lovely president decides to give us another gift this year of all new laws to try and figure out. So let's get started. Like mentioned before, there were both benefits and negative impacts brought by the tax reform to the individual tax filer. Most of the negative impacts affected the itemized deductions. I have already talked about the itemized deductions in a previous webinar. I will put a link to that video in the attached article. A few of other negative impacts through 2025 for individual tax filers are the elimination of personal exemptions and the elimination of moving expenses deductions, with an exception for members of military in certain circumstances. So do check in on those circumstances to see if you qualify if you're in the military. Now let's switch gears and talk about the benefits. Those are what we're all excited about anyways. Generally, the tax reform dropped the individual income tax rates and the increased income amount brackets, ultimately reducing the tax owed by individual filers. The tax reform also doubled the standard deduction to $24,000 for married couples filing a joint return, to $18,000 for head of household filers, and to $12,000 for singles and separate filers. The tax reform also doubled the child tax credit to $2,000. It is partially refundable in the case that your credit exceeds your tax liability or brings your tax liability below zero. The tax reform also extended the tax-free Section 529 plan distribution to include those used to pay for qualifying elementary or secondary expenses up to $10,000 per student per tax year. The AMT exemption was also increased to $109,400 for joint filers and $70,300 for single and head of household filers, and $54,700 for separate filers. The tax reform also doubled the gift and estate tax exemption to $10 million adjusted for inflation. And one of the most talked about changes from the tax reform is the elimination of the penalty associated with individual mandate under the Affordable Care Act of taxpayers not covered by a qualifying plan. This goes in effect for months beginning after December 31, 2018. That means for 2018 tax returns, tax filers will still have to disclose if they had health coverage during 2018. However, after that, each taxpayer is free to make their own decision on the need of health coverage without being penalized by the IRS if they choose not to have coverage. That is it for today. Until next time.